With interest rates dropping and even bigger rate cuts on the horizon, many people are asking, should I buy a home in 2025 or should I wait until later? In this video, I'm going to break it all down so you can make the right decision for your situation. My name is Sam Sharp. I've been a lender for nearly 23 years now. I've helped over 10,000 people buy a home. I do this day in and day out. May have not actually helped you buy a home, but I've done that loan. I've seen that scenario. And although we're constantly learning, that's the point of this channel, is to learn together and to make sure that I'm sharing you the experiences that we've had so I can help you answer the questions you might have and have a better chance of buying a home and making the right move. Before you decide on whether or not you should buy in 2025 or wait longer, let me just set the stage on why you want to consider this. Why is this question important? Why does it matter? What is happening with mortgage interest rates? In late 2024, the Federal Reserve cut interest rates 0.5%. And at the time of filming this video, in just days, we'll find out if they're going to cut interest rates even further. The general consensus is that we will see a 0.25% cut, and going into next year, we may see further cuts. But does that really matter? Something to consider that when the Feds cut interest rates, this doesn't necessarily mean that the consumer rate goes down. In fact, after the last two cuts, we've watched interest rates increase when it comes to borrowing money on, say, 30-year fixed mortgages. So what's happening behind the scenes is the other factors that are at play. Interest rates are following economic news when it comes to the labor markets, as well as when it comes to inflationary patterns. When we went through and we saw the rate cut, this is great. Well, unless you're talking about your savings, because now you're earning less on your money, so it's not actually that great. But when we talk about the general move in the consensus, this is great, except for going into the election, and this is of no political affiliation whatsoever, but a lot of people believe that the incoming policies are inflationary in nature. And this causes a concern because interest rates have been higher because inflation is high and we're increasing interest rates to try and fight inflation. On the flip side, the labor markets. Initial reaction has been positive. People are predicting economic growth. We're saying that some of these policies could be good for the economy. Well, it's contradictory because you're saying that the tariffs could be inflationary, but at the same time, they could be good for the economy. The reality is that when the labor markets show that they're strong, when we show that people are spending money, then this is going to hold interest rates higher, especially as long as inflation is still a concern. So regardless of whether the Feds increase or decrease interest rates, although it's good, it's great news, it's positive light showing that we're moving forward, that the belief is that we are headed for the light at the end of the tunnel, if you will. Regardless of that, you want to pay attention to these economic factors to have a better idea of what's going to happen. At the time of recording this video, the 30-year fixed is averaging 6.875%. This is compared to 2023 when interest rates were averaging 7.3%. So it's a positive move. Although I'm sure a lot of people are saying, wow, that's still really high. Those interest rates are at the top. What are we considering? Let's put that into context. I'm not saying that these interest rates are not high compared to what you saw in 2020 and 2021, but those were unrealistic interest rates. We saw rates in the 2% and 3% in a range that just wasn't healthy for the economy. There are other factors at play that we have to consider. But regardless, you probably feel like interest rates are high. Think about the 50-year average. That came in at 7.75%. So we're almost a full 1% below where we saw interest rates averaging over the last 50 years. So I'm providing this information to give you an idea of where interest rates are at, what's the general attitude of the economy and what we're predicting. But now let's talk about how does that impact buying a home in 2025. Knowing all this, I think what's helpful is let's talk about the actual numbers, right? Talk is cheap. Maybe we're talking about things being expensive, but what impact does that have? And in this example, we'll use a $400,000 loan amount. Well, let's look about what is a 0.5% difference in that interest rate? How much does that move the needle? Based off borrowing $400,000, that's roughly $132 a month, or over the life of the loan, it's $46,000. I'm not saying that's not a lot of money, but I don't know if that's really going to be the factor that you should consider when we're talking about affordability. So many people are focused on the interest rates, right? But at the end of the day, what are we concerned with? We're concerned with money. How much does this cost? How much are we paying? So we want to focus on these factors and say, okay, well, what do these interest rates mean? How does this actually impact how much I'm spending? What will that mean for my bank account at the end of the day? So instead of just focusing on the interest rates, I want you to think about what you can actually afford and going through and looking at that. So instead of just the interest rates, think about your monthly payment. what makes up that monthly payment. You want to go through and consider the other costs when you consider your taxes and your insurance. Affordability isn't just based off of an interest rate. It's based off of your monthly payment. What does that mean as far as paying this amount every month, and what does that mean to your lifestyle and the cost of living? For example, instead of just talking about the interest rate, if you were to speak with me, we'll talk about meeting your budget, finding out how much are you comfortable spending and what does that mean. Now, we want to also make sure that you can be approved, right? There's approvability and there's affordability. So first we need to make sure that you can borrow the amount of money you need to find the place where you want to live. From there, we can talk about affordability. How do we make sure that this matches up with the price point that you're considering? So you want that balance point where the price of the property that you're considering in line with your down payment matches with the monthly payment that you're going to be comfortable with. I want to know what you think. Do you think it's a good time to buy a home? Do you think you should continue to wait? Did you buy a home already and you're thinking maybe you shouldn't have? Tell us the details. Drop a comment below and let us know what's going on. All right, so we've talked about interest rates. We've talked about the impact that those rates have. And you now know that your focus should be on affordability. Let's turn our attention towards the pros and cons of buying now. One of the biggest pros to consider right now is locking in the price today. Prices are continuing to go up. We've seen a shortage of inventory. Now, there are some factors in 2025. Some really good news is that we're seeing an increased inventory, which is great. However, even with this on the horizon, we're still watching property prices go up. So if you're able to buy a home now, you can lock in that price. Remember, you can't change this. In the future, you can always change what the property costs when you're refinancing your home or putting more money to pay down that balance. You can reduce the amount of interest you pay, but you can never change that price. If you spend $1 today, it's $1 forever. Now keep in mind, if you're waiting because you want interest rates to go down, or maybe you think prices are going down, I can tell you now, prices are not going down. And something to consider, prices are going up as inventory increases. If rates do go down, just remember, there's a lot of people, maybe like yourself, who are sitting on the fence waiting for interest rates to go down. The numbers, there's like 38 million people looking for a home when we have less than 1 million homes for sale. So let's just say inventory goes up to 2 million. Well, you've got a lot of people making a run for that. So even that increase in inventory is not going to be enough to offset that demand when interest rates drop. So buying now allows you to lock in an interest rate that's still below those highs, but you're getting out in front of it before all of a sudden you have to pay even more. Something to keep in mind, this is the closest we've been to a buyer's market, if you will, right? Trying to see a balance in that, but there are perks that come with this. You're finding a position where sellers are feeling the pressure. They want to sell their property. Maybe it's taken longer for that home to sell, and that's why we've seen some increase in inventory. As you wait and that demand goes up, well, now you lose those perks. Now there's multiple bids. You're running into a place where the seller feels like they have control. And now you're going to lose out on possible credits that you could get that can help you buy down the interest rate and have other benefits. So not only are you paying more for the home, but now you're able to do less with what your options are. Now, I think another positive to buying a home sooner than later is getting things started with building equity in your home. A lot of people are familiar, or maybe they're not, and they should be, with compound interest. You save $1 now, you start it building, you're gonna have more money in the future. Your home is no different. You're building and you're compounding on that equity in your property. There's a lot of people who purchased homes back in 2019, 2020, and as we went into 2021, people were like, oh, we're paying too much for this home. Homeowners have built more equity than we've ever seen. So the sooner you get in, the sooner you can take advantage of that. And one of the last things to bring up are the tax benefits. Keep in mind, you can deduct property taxes and mortgage interest. Now, at the time of recording this video, you could deduct up to $750,000 worth of loans when it comes to your interest. However, going into 2025, as things change politically, there's actually a talk that they may bring the SALT back. Without getting too far into this basically means that you'll have less or no limit on how much interest you can write off on your loan. So that's a big tax break. All right, so these are some of the pros to buying now. Let's now focus on some of the cons. What's the downside if you were to pull the trigger at this point? So the first thing I'll talk about, what you probably see as a pro, and most people are listing this way, is refinancing. Now, I'm not saying it's a bad thing to refinance. You do want to position yourself to pay less interest. But keep in mind, if you're banking on this, well, refinancing costs money. So waiting that puts you in a position where you may not have to incur those costs in the future. I think the second thing to consider is just the uncertainty. Basically, you don't know what you don't know. So of course you find a house that may be checking the boxes today, but of course there may be a better fit later down the road. Some people call this buyer's remorse. You don't want to just jump in to buy a home. Don't buy a home just to buy a home. And at the same time, definitely don't settle on a property that's not checking all the right boxes. So something I would suggest, like if you're thinking about when to buy a home, keep in mind this is where you're going to live. You want to, before you actually set foot out and start looking at properties, make sure you're clear on your non-negotiables. If you're moving from one area to another because maybe you're about to have a baby and you need another bedroom, well then don't all of a sudden move into a studio because you're just kicking the can down the road. You're in a position where you're moving for the school systems. Make sure that you don't settle and say, oh, well, you know what, maybe we'll just go private. Make sure you know up front, all right, these are the items that I have to have when I make a move. This is gonna help make sure that you don't have that buyer's remorse later on. Now, the last one that I'll mention, and I think this is probably the first thing most people think of when it comes to a con, is a housing correction, right? You don't wanna buy only to find out that you're in a position where prices have dropped, you've overpaid for the property, and now maybe this wasn't the best position for you. The truth is, there are some small markets within the country. Keep in mind, these are isolated to certain areas where we have seen property values start to come down. But why? A lot of these areas have dropped because they have overbuilt. So you have some of the more popular home builders out there that have rushed out to take advantage of this. And they've gone through, and not only have they built a tremendous amount of homes in these areas, but they did it poorly. I asked someone about it. I said, I'm not gonna call it any markets right now, Texas, but there were some areas where people said,
how can you buy so much home? That house in my market would cost so much money.
And I talked to a friend who was moving away from there, and he said,
I'd challenge you to find a straight wall in that entire place.
And when you think about that, you have to think about what's behind those walls, what went into the construction. So some of these areas you're seeing a decline because there was a huge rush to try and fill this need, and they didn't do a good job. Now, on the flip side of things, nationwide, prices keep going up. Historically, they keep going up. Matter of fact, over the last 81 years, we've only seen property values drop 7 out of 81 years, okay? So think about that, 7 out of 81 years. 5 of those were during the big crash, which is nothing like the market we're in right now. There's no way that the market could actually catch up to that because this crash was created based off of loose lending guidelines. We were in a position where we saw oversupply, too many properties in the market. There were lending products that were focused on, kind of buy now, pay later in a way where you're getting these really low interest rates that we're just going to adjust in the future. So there's a lot of factors that will keep us from hitting that same market in the first place. So when you consider 81 years, 7-year drop, 5 of those during the crash, those other 2 years and 81 years, I'd say that the cards are stacked against us if you think that property values are going to drop. By the way, a lot of what I'm covering, I go more in depth in a free first-time homebuyers guide that I have. You can grab a copy by clicking the link below. All right, so we've talked about the pros and cons of buying now. Let's take it further. What are some of the advantages or risks if you're to wait? What if you don't buy now and you continue to wait? What does this look like? The first pro is potentially getting a lower interest rate, which could mean more savings. We know financially that the interest rate does impact your payment, which means lower interest rates will save you money over time. And even though you may not feel like interest rates are low currently, keep in mind, you're going to think a lot differently if they go up. If we start to see interest rates go back towards the 8% range or up into the 9s, now all of a sudden that cost of waiting just got a lot more expensive. Now I know that this sounds biased, right? I'm a lender, probably feel like, hey, of course you want me to take out a loan, you just want to make money. And don't get me wrong, I'm in business, this is a business, but at the same time, I've been doing this for over 23 years, and I've got to tell you, watching these patterns, I have watched so many people take advantage of the pros that we're mentioning here. You've got to think about it. If you're just focusing on the cost of the interest that you pay over the loan, then you're missing out on the other benefits. And the fact is that the appreciation on the property right now is moving in a position where you're going to have a lot more benefits from the equity you're building. And of course, you can always reposition that money in the future. There are different ways, not only for you could say you want to refinance, but let's just say you don't refinance. You don't refinance your loan whatsoever. Well, keep in mind, there are other ways to control the amount of interest that you pay on your loan. You can apply additional money towards your balance, towards your monthly payment, which actually lowers the amount of interest. A lot of people don't realize this, but when you adjust the balance on your loan, the amount you have to pay every month in interest actually goes down. Don't focus just on the number, that's the interest rate. Focus now and think about, okay, but what about the cost? What am I actually spending? So there's a lot of benefits and ways for you to control that situation. We can't control interest rates, but the reality is that if they go up and prices go up, it's a lot more expensive. So I think another benefit to waiting could be saving more money for a down payment. People are offsetting what they see as higher interest rates right now. The cost has gone up. One way to offset this is to borrow less money. So saving more money for your down payment could allow you to avoid things like private mortgage insurance, or it might put you in a position where overall you're borrowing less money, so that cost isn't there. Meanwhile, while you're saving your money, you can have that invested in high yield accounts so that you're actually earning interest on your money. So your money's working for you while you save your money, so that later down the road, you can put it to work for you in a different way when it comes to buying a home. And not to be contradictory here, but I will say that a pro to consider could be increased inventory, right? As sellers start to feel more confident, then there can be a higher quality of home coming to market, and you might find something that actually does meet all your needs. So the longer you wait, the better chance you might have of finding a place that's more ideal. Okay, now all bias aside, which is easier said than done, we want to consider both sides of this. So now let's talk about what are some of the cons of waiting. And again, this is for you to decide. You want to decide what works best for you. I'm just going to point this out, do with it what you will. So first, yes, interest rates could go down, which is great. That could save you money. But then, of course, as mentioned earlier, this means that home prices are going to go up. So that puts you in a position where you're paying more for the home. The second could be maybe you're a first-time home buyer. This means now you're renting longer. So now you're in a position where you're not building equity in a property, which is obviously not a benefit. On top of that, rents are increasing. So you're in a position where your cost can be going up for that cost of living, which unfortunately takes away from your ability to save. If you're in a position where you're renting right now, keep in mind, no equity, your costs could be going up, and you might be in a position where overall you get locked into a lease and now you can't make a move. You don't have as much flexibility because you're locked in for the next year. So the last con to waiting is focusing on things that you can't control. You want to make sure that you focus on things that you actually have power over. When you're in a position and you're buying a home, well, purchasing allows you to set the price that you're willing to pay for the property. The longer you wait, if those prices go up, that's outside of your control. Interest rates are outside of our control, but again, how much interest you pay is something you can control. You can focus on this and you can put a certain amount of money towards your debt, allowing you to pay less interest. Again, remaining in control of that. Don't even get me started on the other factors. So you can start looking at saving on homeowners insurance, which has been going up. So finding a way to save money there. Looking at property taxes and having a better understanding on how you can control how much you pay in property taxes by appealing the taxes and making sure you're taking advantage of all the exemptions, like your homeowner's exemption and other factors that will allow you to save more money. So focus on what you can control. The longer you wait, the more of these factors can change, and there's less that you have the power to actually take control of and make sure that you're paying less money. So overall, I think it's just being in a position where you want to feel positive, right? You're buying a home. This is something that should actually be a good experience. You want to be in a place where you feel good about this. You want to find a place that you love, where you want to live. You want to find a place that you're comfortable paying for. You want to make sure that you're increasing your financial IQ by going through and having a better understanding of how to control your monthly payments and the overall cost of buying a property. This is going to allow you to take that power back. You don't have to feel helpless. Maybe you don't buy now. Maybe you wait, right? There's pros and cons to both sides. If you don't take the time to understand what those options look like, well, now you're in a position where that's only going to cost you. Now, if I can leave you with anything from this video and just moving forward, I think the focus is making sure that you're not making your decision based off of the uncontrollable. Don't allow this to chance. Take the steps that you can take to control the factors that are going to impact your life. And one easy way to do that is that, if you have questions on this, if you want more information, drop a line below. I'd love to have a conversation with you and talk to you about the strategies. I want to talk to you and share the things that we're doing that have been helping our clients stay in control and make sure that this doesn't have to be a completely stressful, frightening process.